Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly markets outlook for the week starting of 9 to 14th of September 2018. Well, I record this video on Friday night. It's actually 11 p.m. here. For one reason, I will not be here during the weekend, so I just wanted to upload it as soon as possible for you. So you have my view for the coming week, the trading week. So thank you very much for watching this video. I hope it helps you and gives you some ideas how to get ready for the trading week, what to trade and what are the best opportunities. As always, on Monday I will be publishing the weekly outlook, the PDF version. So you have two options to get it. One, just come back to this video on Monday, and on the description below you would see the PDF link, or just follow up the email of my newsletter, as I will be sending the email with the updates as well. As always, we will go over now the outlook of the review of the previous week outlook to see how well our setups performed, how well our plan works, and the trades we wanted to trade, how well they work or not. And also we'll share the best views as I see them for the coming week, okay, for the majority of the pairs. And of course, this is a weekly outlook, and if you would like to get the daily live trading setups with myself and my trading team, so I invite you to join our Traders Academy Club, and the join link is right below the video in the description. You have 7 free trial days. Yep, that's right. Just want you to come and see if it's for you and if we can help you with your trading. So the links to register are right below in the description. So let's begin. The first pair is the euro dollar, as always in our list, the most tradable pair on Earth as it seems. This is our outlook from the previous week, so let's start checking what was our plan. Our plan was to get, let me just open my pen, I forgot my pen here. Where is my, here we go, my pen. So our plan was to get the drops, right, and go for buys. That was the whole idea with the euro dollar. So that was, we actually got a move down. We wanted to see that going to below this area, which it did right here, and to get buys, which it did. Since then, it turned to be bearish hidden divergence, which basically blocks the rally plan, and now it's developing second leg. My view remains same. I think it should be blocked here before it makes the rally, for one reason. The way I see that, the pair is forming 1, 2, 3, 1, 2, should make a stoppage, and with the breakout should provide the further continuation. Now the best levels to watch for that reversal to happen is actually right here and right here. That's the best zone. So that's around 115.20 down to 114.50, where we can expect the retrace to happen from. Now here comes a very important thing. We must be careful with the euro dollar. Why? Because the whole world is expecting the rally here, and that could be one of the problems. So what do we have here? If we cross below 61.8 of the Fibonacci retrace from two lows, right? Imagine it goes straight down and holds below, so it breaks and holds below. That's a very, very serious warning sign. And then the euro is back to bearish, most likely developing further leg down towards the zone of 112 down to 110. So be careful with the buys. I am bullish as long as it didn't break and hold the 61.8. From my point of view, that's the places we can expect the rallies. Now I want to remind you that this rally started from the 5th, right? On first it formed the bottom, and we do follow the crystal ball for these buys, and we got the 5 as the critical day for buys, right? So we got this. Now 9 come in play. That's going to be right at the beginning of the week, right? But there is a good chance it's going to set the bottom and continue. The warning sign and the reversal sign, well, I just explained. So that's what we will make us to invalidate the buy plan. Next pair on the list was the Euro Pound for us. It was pretty clear setup, aggressive but pretty clear setup. We wanted to see a bounce, a rally, and a sell. So the whole idea for the Euro Pound was, that was our place, right? A rally, there came the bearish divergence, which we'll have to see, trendline breakout, and we are riding the sell. So the biggest question is, right, so this is our plan, and so far so good. So the biggest question is, what's from here? Now, to be honest, I would be very careful with the Euro Pound. It looks like it's still bearish, but none of the daily lows is broken. Daily big trend line is still holding. It still could easily reverse, make the breakout, and continue further. So I wouldn't rush into the Euro Pound on any setup and any price. If it does manage to make the structure of the lower lows, then definitely back to sell the rallies. Okay, so I do want to see this low broken, or ideally the trend line broken, and then we get sell the rallies for longer term continuation. Meanwhile, it could easily block that with the bullish hidden divergence, 4-hour chart to be a bullish divergence by itself on the regular type, make the breakout, and further continuation. So don't fall into this trap and say, oh, okay, it's going to crash for sure. Wait a second, things could change. Now, if we take a look fundamentally, this week we have the GDP and the manufacturing production in Britain, but the main focus is going to be on Thursday. Then we have the cash rates in Britain and in the Eurozone. That's basically the one to pay attention to, the ones to pay attention to. So that's for the Euro Pound. Worked perfectly this week. Well, the previous week, sorry. This week is beginning trickier. I do want to see the scenario as I just explained. If it happens, we are good to back to sell rallies. I wouldn't rush into that right now. Next one on the list was the EURCAD, which we wanted to see little pullbacks and continuation up, right? Or deeper pullbacks and continuation up. What we got on this pair was actually that exactly. We got the scenario here, right? That was the place. We got the little pullback and we got the continuation. Now the pair has reached a classical zone, sorry, it's right here, of clearance. It came, it cleaned the stop losses around this area, and now look what happens. The pair now is creating here some kind of ascending triple cycle, which could easily bring into double wave correction. And with saying that, we should take a look on a daily chart. Daily chart provides some kind of a bearish hidden divergence, more aggressive because we don't have a positive high here. Some kind of bearish hidden divergence. 4-hour chart on that place, sorry, back to daily. Daily becomes now as 2 cycle, double cycle, and the 4-hour chart on that very place starts to be a cycle by itself. Leg number 1, 1, 2, 3, each of them is a cycle by itself. Leg number 2, which is also 1, 2, 3. So it could easily go and make short-term retraces now, and that's pretty much what I would be looking to do. Short-term, sell the rallies until the 4-hour will not show signs against. So that's pretty much what I would expect for this pair on the short term. Okay. After that, it can easily hold this zone and create one more push, like 1, 2 on a bigger view. Definitely possibility, but as for now, and as long as this top holds, I would be looking for sell the rallies. At the moment that the 4-hour chart becomes a bullish divergence and 1-hour chart will confirm that, it's time to be careful. So that's for the EURCAD. New Zealandian CAD, we wanted to see another push up and sell. This push come right here, right? So it didn't create a new high, but it was the double wave push. Now in that place we got a bearish hidden divergence formed, and the 1-hour chart completed by itself a divergence. So when that happens, we have a double cycle again, continuing the weekly and bearish direction. We are back to sell. We remain bearish here, and I would expect the New Zealand and Canadian to keep pushing towards the 100. So from my point of view, bearish pressure was and remains the plan. Sell the rallies. So that could be easily continuation or trendline breakout, retest, and sell continuation as well. Next one on the list is Aussie versus the Kiwi, which we wanted to see buys from here, and that worked pretty beautifully. That was the case, and we got it rallying. And now the Aussie Kiwi is stuck inside the range. And here is what we need to pay attention to. This range might be just a corrective cycle to the triple cycle we have before. 1, 2, 3. After that comes the range. If that's the scenario and this top holds, then the Aussie Kiwi could make it towards 107 plus, right? So that's definitely a possible scenario. The only way it could become bullish in such case again is if we break above the range. I forgot for a second the word. The range. We go and create a corrective cycle, then we can look for the buys. But it must break the top of the range and hold above for a while. Must. If it doesn't do that, we are back to the bearish scenario. And for bearish scenario, there is a wonderful possibility that this triple cycle is going to make it to 50% retrace. And guess where it meets it? Right here. And the 61.8, which is also a possible target, is the zone of 107. So if the bearish scenario goes the way I suspect it might, look where we got the zones. 61.8 and 50 meet right here. Right? And further towards 107. From then, I would expect, again, looking for the buys. So that's for the Aussie versus the Kiwi, which we have here. Now, as per the statistics, previous week was wonderful statistics, bullish signal as we got it. Now, we do need to pay attention to all the days coming, 9, 10, and if not, 1 week after. So that's what we want to see, right? The 61 and the 50% or 107 before we buy again. Okay, next one. Pound versus the franc. We wanted another low to be created. Another low was created right here. And we're looking for higher highs. We don't have it at this moment. So we're waiting for clearer signs. As simple as that. Now daily does have the double cycle here. It's weekly and daily is a cycle by itself on each of the legs. So I do believe that this area is going to be the retrace area. The best scenario for that would be, of course, if we can get one spike and higher highs, right? But if it does hold this bottom and breaks the trend line, since this is a bullish divergence, that's definitely a good opportunity to start looking for the buys. So pound franc, I'm looking for buys. Aussie franc, our plan was sell the rallies That's exactly what happens. Rallies, bearish, hidden divergence, sell continuation. Daily no divergence, weekly no bullish divergence. Aussie franc was and remains bearish. Yes, it could make some pullbacks, but our plan wasn't remains yet bearish. Pound Kiwi, with the break of the triangle, we wanted to buy the retraces, and that was our plan. And this is the Pound Kiwi, and the plan so far so good. We got a pullback, we got the rally. Pound Kiwi remains bullish, buy retraces. Next one on the list, New Zealandian dollar. The plan was bearish, sell the rallies. And the New Zealandian dollar as well made little rally and sell continuation. New Zealandian dollar, from my point of view, was and remains bearish as well. One thing to pay attention to is the possibility of another false break here and this break of the high. If that happens, we are going for some bullish correction. So for the sells, I would say invalidation would be right here. Break above that, game over for the sells for some time. As long as it did not break, the plan was and remains bearish. Pound Canadian, our plan was by the dips, by the retraces, worked perfectly. Pound Canadian, here we go, boom, boom. Now the question is what happens with the pound dollar, and here is the thing, it becomes very tricky because weekly is bullish divergence, daily is bearish divergence, bearish hidden, and the question is, so is that over? Now that's basically where the tricky scenario comes, which is going to take the control. I would say short-term retraces and still a buy, because we have a targets right here. That was a double cycle, so that's the zone where we will want to see. So pullbacks and still a buy. Invalidation for that would be this low. So that's my plan for the Pound Canadian. The next one, EURUSD. Plan was simple, retrace and buys. So far, so good. We got the retrace, we got the buys. So my plan also remains bullish, still remains bullish. I see no reason to get out. Any pullback, back to the zone or slightly lower, look for buys. Every retrace should be a buy opportunity. Of course, best when it comes with bullish signs, like bullish hidden divergence on this week, right? That will be the best signs to go for buys. The way I see that, it can go towards 165 or it is closed, or even 167. So for me, it's still bullish. Next one on the list, CAD versus the franc. Our plan was bearish. Now it has, that was our plan, right? We wanted to see the 61.8, so we wanted to see that going lower. It did, and it did reach the area where we wanted it to see. Now it's building up a bullish divergence, possible divergence. We need to pay attention to that. 4-hour chart still has nothing, so I would not be surprised if 4-hour chart would make one more low for us, and then with the divergence would start looking for the buys. So CAD franc could still make one more drop lower. The only way here I would invalidate it is if we get 1, 2, 3, 1, 2 and breakout. That would invalidate the short-term bearish scenario. The way I see the CAD franc is still short-term pullback, one more low towards this zone before the buys. Now the 4-hour chart is a straight leg. There is divergence, yes, but we don't have any clear two candles nowhere. I don't like such opportunities. That's why I think it's not over yet. 1-hour chart also has no divergence on the last part. I don't like these scenarios. So from my point of view, it's kind of temporary correction before the new low to be taken. Okay, gold. Our plan was look to sell the rallies. We wanted to sell, or even if we get some new high. What we got is exactly, why did I open a folder? What we got was exactly that. We got the move down, and so far it continues. For me, as long as we are below the invalidation, gold should remain bearish. I don't see any bullish reason. Silver, we wanted to see a new low below 14. We got a new low below 14. We don't have any bullish signs yet. So from my point of view, silver can still continue and remain bearish. So honestly, I wouldn't look for new positions now. If you have position running after this retrace, wonderful. I would not do more. Cash out partial or stop loss to break even. To open new position right now, I don't think it's too smart. Weekly has no divergence, but daily does. 4-hour chart is forming a divergence as well. I think below 14 should be the end. So to fight it right now for more, I wouldn't do it. Sugar, our plan was retraces and buys. Here is the sugar. Here is the retrace. Here is the buy. So now the sugar is building kind of a triple cycle here. Break above this high should provide some pullbacks and further continuation. Sugar remains bullish. It might be not healthy, but it remains bullish. DAX, our plan was sell. DAX is a monster, and we got an amazing sell. We got that and further continuation. There is nothing currently preventing that to continue lower. So from my point of view, retraces and sell continuation. NASDAQ, which we wanted to see a false break forming, finally has the false break at the scenario of, well, it's a fake convergence coming into this area. I do want to see after fake convergence some lower lows making here and then going for a sell, or alternatively push from the 4-hour chart. So that could be something like special corrections and sells. What I do love a lot is the weekly engulfing. It looks wonderful. Last two we had was one here, and then we got a kicker. Both of them provided good moves. I think NASDAQ is ready for sales, so we should be looking for lows and sells. Now, at least with the trendline breakout. There is no classical divergence on a trendline breakout. However, there is a fake convergence on a trendline breakout. So that could be a classical scenario. Let me remove that here. Classical scenario of some big fish beginning. So let's see how the NASDAQ works for us here. And cryptos, we got the Ethereum versus the Bitcoin here, which is still holding and fighting the area. We're still required to see some higher highs, but they are pretty far right now. So the best thing would be 1, 2 false break and higher highs. As long as it did not happen, it is still bearish. Once the false break and higher highs turn, the daily cycle with the 4-hour chart convergence should be the reversal sign. Next one we wanted to see is the Bitcoin versus the Bitcoin Cash versus the Bitcoin. We wanted to see a new high breaking it. Unfortunately, this high was never broken. Okay, so we never got this scenario. Therefore, put an X on this, as for now, simply nothing forming. One interesting on the list is the MONERO. We got here kind of a triple cycle, and now it's forming the second leg. So if we get second leg, that might provide beautiful buy opportunity. So watch out for the MONERO. Now, a quick one. New pair adding on the list is the dollar versus the Canadian. Some bad news come from the job market in Canada. We got a trendline breakout here and convergence holding. The way I see that as long as we are above the invalidation, pullbacks, and we are after buys for the dollar CAD. That's another new pair joining us on the list. We have the levels here and here. Good consolidation zone where we can see that going for the buys. These levels are around 131.20, the first one, which is currently holding. Next one is below 131. And remember, the invalidation has to be right on the low, 128.80. Another great one on the list that, from my point of view, is the Euro versus the Kiwi. Another pair that I think has much more to go further. All the way up to here somewhere. That's like above 180. Daily currently is building some kind of short-term possible retrace, which we will want to go and to buy. So every retrace is a buy. That could be back to the area of 176 or 174.50, and we should be looking for the buys. So that's the main things for for this week. Now there are many pairs like Euro, Yen, Pound, Yen, etc., and they are really not too clear from my point of view at this stage. So I wouldn't deal with them. Really, I not quite sure how to eat the yen pairs right now. I don't know. I really don't see anything that would be a wow. So for me, it's a skip. So that's all. Previous week was a wonderful week, as you see. Almost all the ideas and the setups we wanted basically provided as a trading opportunities, worked well, moved well, paid us well. I hope this week will be the same. This week we have several important fundamental news of the cash rate in the Eurozone in Britain. A few more important news to follow up. So it will be a very interesting week ahead. September, volatility is back. Be there, trader. And if you are not yet a member of Traders Academy Club, the links below are the registration link. Join our family and join our trading rooms. Let's trade together. So thank you very much for watching. I hope you enjoyed the video. If you did, please show your support back. Some like button, some feedback on the comments would be very much appreciated. Feel free to share this video with anyone who you believe can have an advantage by watching this video. And I wish you a wonderful trading week. Thank you very much for your time. Happy weekend and happy trading week ahead. Yours, Vladimir Ribakov, Traders Academy Club.